Well, good day, everyone. Good Friday, actually. Happy to have you here today in our Trading a Smaller Account. I'm Connie Hill. I've been filling in for Barb Armstrong while she was going in on a personal project, getting her knee reconstructed so that she didn't have to be in pain the rest of her life. So we've been able to enjoy let her have that time off so she could really recuperate. But good news is we're expecting her back next week, okay? So just want to let you know, I know some of you are big fans of Barb, as you should be, and so just letting you know she'll be back. Now, I do hope that you're a subscriber with us. I hope you're following us on X. I'm Connie Hill CS. Brent is Brent Moore CS. Why do I say Brent? Because he is in the chat. You probably have noticed that. He's going to help us out. I'll keep my eye out for questions, but if there's some things I can't quite get to, Brent will help me out. He's a fantastic coach and friend. We've worked together over 20 years now. In fact, most of us as coaches, we've got some tenure. We know dirt on each other, but Brent, there's no dirt to have on Brent. James, on the other hand, there could be some dirt to have on James. Anyway, let's go through our disclosures. We've got a ton of ground that we need to cover here today. Options carrying a high level of risk and are not suitable for all investors. We will be using the Paper Money software application. It's what you download to your computer. It's the most robust version of thinkorswim. Past performance is no guarantee of future results. What we talk about here is for information and educational purposes only. Do not consider it a recommendation of any sort. In this webcast, oh, do you know what? I wanted to show you something that I goofed up. So we'll just do this. We'll do an overview of the market. We're always going to be placing some new trades, and we have a ton of trades to follow up on, although I want to kind of snap through them as quickly as we can. Now, coming up on September 20th, which is, I guess, 5 weeks from now, we're going to have a market drive event. And you are welcome to come to it. I'm going to hop over here. I'm going to go over to our Schwab page where we're advertising this market drive event. It's just one day. It's on a Saturday. And some people have asked, what's the difference between it and a workshop? And a market drive event, yes, it is only on one day, but it's not as choreographed per se as our workshops are. And our workshops, man, we're going to go through the same slide for trading option strategies and technical analysis, right? We go through those same slides, although we bring in fresh examples. A market drive event is a little bit, I'm going to say, less structured and a little bit more free form, although they know what they want to cover. They've got an outline. And typically it's some other presenters that join the market drive event that you don't typically get to see. And so if you're interested, would love to see you there. You have to make sure to save your seat, right? These things fill up quickly, so feel free to do that. All right, let's do this. We've got some different rules in this class, trading a smaller account. We say we're working with a smaller portfolio, and in your case, you know, your portfolio could be totally a different size. You could be $7,000. You could be, $35,000, or maybe allocating a portion of your portfolio to be more active and to have it kind of in a growth mode. Okay, the most we'll spend on any stock is going to be about $5,000. We don't want to risk more than $400 to $500 in any single trade. So we're trying to keep our risk really small. So that means we're going to focus on short-term to intermediate-term type opportunities. We're going to trade in both market directions. Okay, on the bullish side, long stocks, long call, short puts, buy right, covered call, short put verticals, long call verticals, and we've kind of actually done a little bit of all of those over the last few weeks. We haven't had a ton of opportunities to go bearish, but when we do, we'll do long puts, long put verticals, short call verticals. We'll also sometimes get into iron condors and calendars when it seems like maybe the market's a little bit more range bound. Maybe it's not really trending one direction or the other. That's when we'll explore a few more of those types of opportunities. Okay, so that is how we're going to go with things. Now I want to pop on over here to my thinkorswim. And here we go is my thinkorswim. We've got SPX up here. I'm just going to collapse this watch list. By the way, the trades that are the stocks that we're going to use for some of our example trades today came off of this watch list that we use in our short verticals class. I teach that on Thursdays, and the only thing we trade in that class is short verticals. But this watch list, I would say, could be used for any kind of strategy you might be interested in, option-wise. In a smaller account, some of them are going to be bigger size. You're going to want to do, meaning they are a little bit more expensive of stock, so you're going to want to do spreads in those. But let's bring up this information here. All right, you guys know what's been going on with the SPX, the NDX. Again, today set another record. Yesterday, the SPX hit a new all-time high. The NASDAQ hit a new all-time high. So really, it seems like it's kind of just grinding it out a little bit higher, a little bit higher. And so this blue line's a 10-day moving average. So the SPX is well above it. This red line's a 30. Okay, and it hasn't actually been down by the 30 for quite a little bit of time. This is a month or a 3-month chart we're looking at here. Came down to it once here, actually got a little bit below it, but next day popped right back up. Okay, so we know it's been bullish. NASDAQ's been fairly bullish, although I should mention today looking like a little bit of a pullback. We were flat earlier. It looks like maybe a little bit of movement, a little bit of pulling back. Let's look at the NASDAQ here. Have a similar story here where we see, yep, it's above its 20, it's above, or it's 10 rather, it's above its 30. It's been just making higher highs, higher lows. Like I mentioned 2 days ago, set another all-time high. Looks like it's pulling back here a little bit, but look at this, it's not even touching the 10-day, okay? So what does that mean when we look at our stocks and our positions? It could be that some of them haven't moved a whole lot. If we've kind of had an up a day, a down a day, not a lot could have happened. However, the overall tone probably in our portfolio, we're going to be looking at it and saying, yeah, it should be probably more biased to the bullish side of things, and it is. Okay. Now, I do quickly want to review some of the trades that we're in, and I think this is such a valuable part of lessons and classes that we do, because you don't want to know just how to get in. You want to know, what do I do after I get in? How do I handle this? How do I manage it? And I've thrown quite a bit at you over the last few weeks. This is an intermediate level class, and so I don't spend a ton of time talking about how this particular strategy works and how that strategy works in depth. Although those are the kind of things I do in my short verticals class. Man, we go a lot deeper on short verticals in there than we might say in this class. But let's look at a couple of our trades and what they've done. Some of them actually hit some exit points today. Let's bring up Lennar first of all. Lennar, we got in a week ago today. So it was just last Friday we got into the trade. We did a long call vertical, 120, 125. And it cost us 225, so 275 was our max theoretical gain on it. We said, hey, if we can get most of it, we get the chunk of it, let's get out at 443. Today, let's see here. Today, down here on the executed orders, trade history, it was shortly after the open here today. It got us out at 475. Fantastic, right? So we had about $250 per set of contracts. We had 2 contracts, so that is $500. Now, that might not seem much money to you if you're trading a much larger account, but these small little chunks, using this part of your account, being a little bit more growth oriented with it, it takes those kind of trades to help it build up. Okay, so if you said, yeah, in one trade in 1 week, you made $500. Okay, if you went along with that example trade in your paper money, pat yourself on the back. Okay, hopefully you learned something. And we can see if we look at the chart here real quick, we were getting in on a retest of this support level here at 118. It was an ascending triangle. We said, hey, it may have a target clear up here. Well, it went clear up here, and then today just tiny bit beyond, and then hit our profit target. Okay, so we are out of that trade. Let's take a look at one that I was hoping we would have more to discuss on. We don't have more to discuss on it. It was Avco Broadcom. We did a couple of weeks ago, we did 2 trades on it. We did a short put vertical and a long call vertical. And it was actually on, let's see what the date was here, August 4th. So this was back, not Monday of this week, but the week before. And we didn't do both because normally you would. We did both because normally you don't. And I wanted to compare and contrast them and how they were different from each other. Well, the stock has moved the direction we expected it to. And so as it moves up here, both our trades actually are doing pretty decent. Okay, so our short put vertical, we're short the 285 strike. Price is staying well above it, right? So it's gone up like we hope. But this trade could go flat. It even could come down a little bit and would still be in decent shape. The second trade, the long call vertical, we are short leg is at 300. So we needed the stock to do some moving, and it did. It moved past 300 and it's still sitting above there. Okay, so that's good. Both the trades are looking like we would want them to look. However, they just haven't moved a whole lot. Okay, let's come over here to our activity and positions, and let's collapse this and open up our Broadcom here. We're going to see here, they're both up on the trade, and they should be, as we saw in the charts. But let's see, on our vertical here, we're up all of $45. And on the short put vertical, we're up all of $65. Okay, so interesting. We have more opportunity. We have more profits that we could bring in possibly with the long call vertical because we spent 270 on it, which means we have about 230 we could gain on that trade if we went up and hit our max profit. In the short vertical, we received a credit of 150 per contract, and we only did one so we could compare. But that's our max gain. It's not going to get better than that. We know it. We've already received that credit in our account. So I was hoping there might be a little bit more distinction by now. There's not. Both trades are working out for us. And the short vertical right now is producing more profits per dollar. The long call vertical, if it were to continue to run, we've got a couple more weeks in it. It could be the one that actually makes more, but we're going to see, right? We're going to continue to let those guys run. Beauty says, is there a reason we use 30 to 40 days on trades for vertical spreads? Is this mainly due to time decay? Bingo, Beauty, you've got it. A lot of times in verticals, we're trying to balance getting a good enough return and letting time decay work in our favor, having it help us out. If we were to do a vertical out 60 or 90 days in time, I'm going to say you'd have to exercise quite a bit of patience. The theta value, say on a short put vertical, is going to be really low 3 months out. But we're trying to kind of get it in this time frame when theta decay becomes, as it gets closer to options expiration, it's going to intensify. And we want to take advantage of that. So 30 to 40 days worth of time is kind of the sweet spot of being able to sell enough time to make the reward worth it, and enough time that hopefully time decay can work for us. Let me click this off here real quick. If we were to go to the trade tab here, and it doesn't matter what stock we might look at, we could open up our Greeks, and let's just go to Delta Gamma Theta Vega. And here's our theta column here. We actually have a short vertical here, or let's see on this one. Here's our position out here, 285 to 80, okay? And the theta on this one is a 0.26, okay? Just keep that in mind, and that is for a 285 strike. But if we came out here, let's go out to, say, November. Let's come out to the theta column. Look how much smaller they are. We've got 12 cents, 11 cents, 10 cents, 9 cents, 8 cents compared to 26 cents. Yeah, that theta gets just kind of continues to increment the closer it gets to options expiration. So you are right on. Now, could you go longer than that? You could. I'd experiment with that in your paper money account if that's something you want to do. And you could notice the difference, okay, of using a longer time frame. You should notice something, and one of those things is going to be it takes longer for that time to decay. All right, great question. Jack says, if a short put vertical has gone against you and you wouldn't mind owning the stock, couldn't it be an inadvertent way to acquire the stock cheaper, or does the math not work? That's a great question, Jack. It is something that you could do. We don't have one in this class. Well, we do actually have one in this class that we'll look at that's going against us. Let's do that now. And that could be an option for us. It could be what we might want to do. Let's take a look at Best Buy here. Now, Best Buy is up $10 today. It hasn't been, it's down about 133 here on us. So it's down a little bit. We've got a couple of contracts here. We still have about 35 days till they expire because these are the September monthly. So we still have plenty of time for this particular trade. Let's go see what the chart looks like, and let's determine if we think we're wrong, meaning the trend has changed. It's going bullish now or bearish now instead of bullish, or bullish instead of bearish, right? That it's reversed its trend. On this one, let's go take a look. On BBY, all right. This one, we were looking kind of at a bearish trade, a short call vertical. We hadn't had a ton of these. And this is a good one to talk about this. We got in here as it was breaking down below support. We did a 70, 250, I think it was. My letters are kind of getting blended in there. Short call vertical where we needed the stock to stay below this blue dotted line, which is where our 70 was. So when we initially got in, we had a ton of leeway here. But look what it's done since we got in here. Well, we got in on the lowest date, and since then, would you say the trend has changed? Well, the 10-day is going up. The 30-day has kind of flattened out. It is not turning up quite yet, but would you say that it has a pattern of higher highs and higher lows? Okay, here's our previous low down here. If we're following this up, we might say, well, this candle maybe down here would be a higher low. And maybe this candle here actually made a higher high, but it kept going. So we've got a higher high to go along with our higher lows. So I would say in this case, the trend has changed. Could that mean maybe we do something with it and not be patient with it, give it 35 days? If we think we're wrong from what the setup was initially, this was a descending triangle formation, a bearish continuation pattern. And we got in as it was breaking down below that support area. So if we think it's changed and we're seeing evidence of that, we might want to change our trade. Now, today might not be the best day to change the trade, okay? But what somebody could consider doing, and this is what we'll look at this stock to do, is to buy back that short call and hold on to the long one. If we were to do that right now, let's just see what the values are. Our call that would hold on to our long call, we bought for $1.26. It's now worth $3.32. If we were to go and buy the short leg back, we received $1.87 for it. Would have to pay $4.60. So we would be locking in a loss on that short leg. Now, Jack's question was more like, in a short put vertical, could we take ownership of the stock? You could decide to do that. You would want to run the numbers and see. Typically what many traders will do is they'll measure their percent gain. What's the percent gain if you go by, say that, well, or let the stock be put to you or exercise your right on your long put of that one? The obligation, well, the long put, you don't have an obligation, but you have a right to sell the put to somebody else, not to yourself, okay? And so in that scenario, the potential obligation is really on your short leg where you are saying, yeah, I'll be put the stock. So you could, Jack, if you wanted to, kind of let alone, let it go, see if it actually does get put to you. Or if you just don't want to be in it anymore, that's fine. You could close the trade. So yes, when you have time on your side, like we have here, 35 days, if we only had, say, like 5 days here, we'd be like, okay, just close it out. Get out whatever you can salvage out of the trade, just get out. We don't have any more time left. But given that we have 35 days worth of time, then we do have a little bit of time that we can work with here. So great questions, you guys. Now, Frank says, now Best Buy is going to have earnings on the 28th, which is going to be in a couple of weeks, right? Here's the 28th. Yeah, so that might be a factor. What we're going to do with this one, we're going to watch it. It has changed trend, but if it's pulling back, today's probably not the best day to unwind the trade and say, go buy back the short call. We want to probably watch it a little bit more closely, and we have time that we can do that. We're not going to be sitting together all day, so if it occurs that maybe it's a good thing to do at the end of the day or maybe sometime next week, then we may do that. Okay, I'll keep you abreast of that. So based on that little discussion we just had, Chris says, so should you convert the short put vertical to cash secured put? In order for you to be put the stock, typically it has to be deeper in the money. And generally it happens when we get closer to options expiration date, okay? You're owning a long put, not a short put, is it can be put to you, okay? That you can take ownership of it, okay? But it doesn't mean it's absolutely positively going to occur. Okay, so that's kind of what the difference there is. Okay. All right. So we looked at Lennard. We looked at Avgo. We looked at Best Buy. Real quickly, FCX. We did FCX and we put in 2 targets. That was one of the things we worked with last week. We worked with the theoretical price calculator and we worked on putting in 2 different targets. We said if the stock goes up a little bit, here's our first target. If it goes up a little bit more, that's going to be our second target. Okay. I'm going to zoom in here. This is the day we got in so we did this last Friday and it's moved up a little bit. This was a long call. And it hit our first target. In fact, it did that. Let's go see on FCX. It hit our first target. We bought 2 of them here. We need a little bit more in here. Let me go 14 days. Let's see. Actually, it hasn't hit our target yet. I was thinking it was. This is a different trade for a different class, maybe. Because we did it on 8/8, which is last Friday. I was thinking it was Monday, but last Friday we bought 2 contracts and we have 2 orders sitting out there for it to hit our target and for our stop loss. So I guess none of them have been hit yet. I was thinking they had, but they really haven't. That was the previous trade. Okay. All right. Lots of things in the hopper. So we're going to just let them continue to work, and some of them have hit their targets like Lennar. We're happy campers about that. Steven says, is there a reason you don't have your positions like shown on the chart? I haven't documented it yet. And you're right. Sometimes I will do that, Stephen. I'll put out here kind of what the target is, what the strike price is, like I have on someone. This one, I just haven't taken the time to document it yet. All right. Well, I want to get to some new stuff today. Right? And I actually have quite a few things lined up for us to look at. Now, I do have the question for you. Who used the theoretical calculator in the last few days since we've talked about it? Have any of you experimented with that? And if you have, what did it help you with? Okay, that's what my question is. What did it help you with? Right? You don't want to do exercises just for the fun of it and to take up your time. You have plenty of things you might like to do with your time. Okay. And so it's the idea of how does this tool, taking the time to use it, how does it help you? Okay, so let me know. Oh, MSTR is coming close to its 200-day moving average. That's one. I don't think it's from this class, though, that we have an MSTR trade going on. I think it's a different class we've got that going on. That might have been from, is that yesterday? Yeah, actually MicroStrategy, now Strategy. Okay. New opportunities. I mentioned to you that the watch list, the stocks that I grabbed from today were from this particular watch list. You might go, oh, well, I'd be interested in that watch list. So let me show you where to find it. Okay, because it could be a great watch list for a ton of option strategies because we were looking for stocks that were liquid, for options that were liquid, so that we could use them in any scenario. So we're willing to trade bearishly on this or bullishly. Okay, and this is our list. It's pretty long. Okay, where can you find where we actually did that? If you are a subscriber to our Trader Talks channel, then you can see our playlists. Okay, on our playlists, you would come down and look for the short verticals class, which is about 7 to 8 rows down, kind of moves around a little bit. Here's our short verticals class. I'm going to just click in the middle so that we see all the different classes listed here. And then come down to this one here, focusing on liquid stocks with ample open interest for your option trades. That's really a handful, okay? But basically, on this webcast, we went back and redid that watch list, which we update it once a month, okay? That's where you can go and find it. So if you're a subscriber, great. Makes it so much easier for you to find our information. Now let's take a look here. I'm going to bring our scratch pad back because usually I need a little bit of room to write some numbers down. Let's take a look at our first trade here. Greg says, you do market your charts up so you can visualize the P&L versus time. Absolutely. I think it's a great idea. And like I said, I usually do that on my trades. FCX, I just had not got around to. All right. Sometimes that happens when you're busy. You don't get around to certain things. All right. PDD Holdings. This is a foreign company. It's a Chinese stock, so it does have additional risk. You want to be aware of stocks that do that. How do you know that it's an international stock? This ADR that you might see at the end of after the name of a particular company, that's the indicator for that. American Depository Receipts is what it stands for. But if you were like, well, I want to know a little bit more than that, what country is it? Okay. I was thinking it was Chinese, saying this is in Dublin. Oh, man, I got it confused with something else. So I guess it's in Dublin, you guys, not China. Okay. And it'll give you a little thing about what it is. A multinational commerce group, operates a lot of different business lines, blah, blah, blah. Okay. So if it was in a country maybe that you had some concerns about, maybe countries that maybe have wars going on or conflicts or economic upheavals or things like that, that might make you a little bit more tentative to say, no, you don't have the same reporting requirements that we have here in the United States. You might not opt for something like that. So that's why I want to make you aware of it. But on PDD, ignore this green circle. What have we got going on? It had a nice flagpole, and then it pulled back. It didn't go all the way back down the flagpole. If it did, we'd call it a retracement and not a flag. And it kind of broke out of there. But what's it doing more recently for us? It's made a higher high. It's had a little 2-day pullback, and boom, what do we have here today? A close above the high of the low day. Technically, it's a trade above the high of the low day. The low day is here, and it's traded beyond it. We're not at the close yet, so we don't absolutely know it will close there. But some traders might get in on a move or a trade above the high of the low day. So we're going to go forward with it. Not all stocks have Schwab ratings. Journey's asking, why is there no Schwab rating on it? Not all of them do. They didn't run that by me and tell me about it, so I don't know why. It's not a huge stock. Usually the big blue chip companies, the known names that are, names that you know and love and trade and see and buy in the store and all those kind of things. Many times that's where you're going to see that rating. Sometimes on some of these smaller stocks, they're not going to have it. I can't really talk to the Schwab rating at all, though. Okay, so we won't make any more comment on it. Scott says there is a Chinese company that moved financial headquarters to Ireland. Oh, thank you for that, Scott. You get a bonus point on that today. Okay. Like I said, I thought, well, maybe I confused it with another company. Anyway, let's go to the trade tab here. This is a nice little bullish setup that some traders might like, getting that trade above the high of the low day. It's traded over 6 million shares today. It's got some nice weeklies here that we could possibly use. On this one, though, we're going to use the monthlies. This is really where I was seeing the liquidity. Let's change our columns back to open interest or delta open interest, probability, and Theo price. These are the columns I typically like to just keep here and use. Now on here, volatility, implied volatility priced into the options, a little high. I mean, it's not extreme, okay, but I would say it's in a higher range. And initially, this is what I was looking to do. Let's see if it still makes sense. Doing, 115, 120 long call vertical. The stock's at 119 right now. It doesn't have to move a whole lot to get up to 120. It wasn't quite this far along when I looked at it this morning, but let's see kind of how those numbers look. It's not too bad. Let's go ahead and lock that, okay? So we're looking for the stock to move how much? Until it gets above 200, 119.57 right now, so not a ton. Okay, we want it to go there. We'd want it to stay there for our long call vertical. Kind of, if it wanted to just inch its way up, we would love that. Okay, or just even stay above 120 once it gets there. That could work out in our favor as well. Okay, we would be risking on that 265 to have the opportunity to have as a reward 235. Right, $2 or $5. The difference in the strikes minus our debit here leaves us with 235. Now, some people might want a nicer return than that. If somebody wants a nicer return, they might have to go a little bit more out of the money on both strikes. They might have to come out here and say buy vertical and do a 125, 120, 125, have the stock move $5 more, but they would have a bigger potential reward, right? Because you'd be risking 203, basically $2 to make $3 or 297. Okay. So depending on what your rules are, what you're comfortable with, what you like to see, and what time you have, you might have one preference over the other. We're going to go with the one that's a little bit safer. Okay. Safer maybe isn't the right word. More conservative, doesn't have to move as much. Okay. Greg says, well, do we care about earnings? Let's go see where earnings are. Earnings are going to be probably the 26th. Now, today being the 15th, we've got, 11 days for that before they announce their earnings. Could it hit a target before then? It could. A lot of our trades have. And so if it was maybe like next week sometime, we might say, if I don't like to trade over earnings, somebody might pass on it. This could have enough time that it could hit our target before we have earnings. So I appreciate you bringing that up because you do not want, if you're somebody that doesn't want to hold over earnings, you got to be aware of when that is and pay attention. Have that on your checklist to make sure you know when earnings are. We could, Richard says, why not a bull put spread given the high IV? We could if we wanted to. When I looked at it earlier, the strike prices weren't in a spot where it made it ideal. Here, if we were to consider doing that, we could consider doing this one with the 35 delta. We've got a 47, a 35, a 24. Earlier, I think this was about 39, so I didn't want to go up to a 39 delta, which is why we went on the other side initially. But this could be, for some people, 415 or 4 by 415, we could do a short put vertical. $5 wide, bring in, say, $1.60 of credit to risk 340. Now, reward to risk ratio here, this one would give us a higher return percentage, but this one would require the stock to move less because we would just need it to stay above 115 and it's already there. Okay, so yeah, you could do either one. All right. Because I'd already decided we're doing the call, I'm going to get rid of the put, but I did want to entertain your idea and show you that. Now, if we can risk up to $500 per trade, we can only do one contract here, right? Because two of it would put it over 500. So we're just going to do the one contract. We'll make this a first trigger sequential. Let's go buy this back when we get a chunk. A chunk is whatever you decide it is. A chunk could be 50%, 60, 70, 80. Okay, you get to decide. Let's go with this one. Let's go if we could get 70%. So 30% is left. Okay, so if we come up to the calculator, we'll work out all the math. So 235 is what we have to gain. So if we put in 235, and we multiply that by 0.7, saying we want 70% of that, that's going to give us a value of $1.64. We're going to add that to our net debit of $2.65 right now. That's the incremental amount we want the price of the spread to go to. So let's see if this will work in my calculator. Plus 2.65. That says go buy it back at $4.29. So we're going to put it in here. You don't have to sit there and babysit and try to catch it. Just let automation handle it for you if the spread gets to that amount. If it does, great. We're going to make that good till canceled. We're going to move this to our trading a smaller account bucket. Okay. Any questions on that? John says, isn't it true that often the earnings send the option trade higher? It's not so much that they send the option trade higher as it can be that the implied volatility rises. And depending on what kind of a trade you have, it could potentially benefit it, right? If we're doing a debit spread and we want volatility to maybe go up so that the value of that spread gets bigger, then we might be interested in volatility becoming greater as it moves into earnings, which would help a long vertical versus the short vertical. You're like, oh, I want it to melt. I don't want that implied volatility to go up. So it's just understanding the role that sometimes as they approach earning stocks, yeah, they can absolutely do that. All right. Next up here, this is let's go with this one first. I'm going to go with Abbott Labs. What's going on with them? Well, they had, a couple months ago, they had an ascending triangle. It broke out of the ascending triangle. We're thinking all is well in Abbott land. And then it broke back down below the support that should have held it. And then it broke back down below this diagonal support area of that triangle. So definitely it went bearish, okay? Has it changed? Has its tune changed? Can we visually see that it now has higher highs and higher lows? Yeah, we can. We could rely on the 10-day if we wanted to. The 10-day kind of turned the corner, started going up. But visually, yeah, we can see higher high, higher low, higher high, higher low. What is it doing today? Well, the low in this pullback looks to be 2 days ago. And so the high on that day is 131.65. And right now the price of the stock is pretty dang close to that, but it did trade above it earlier. So we were looking at it from the perspective that it made a trade above the high of the low day, that might be good enough for some traders to say, okay, I like that as an entry. Okay, so we're going to move forward with this one. Now on this, let me go back here to okay, don't see any earnings on the chart. That's when it dropped. So earnings, we don't even need to worry about it, okay? But we are going to do another long call vertical here. And let's see if these numbers still work out right. I was looking to do 130, 135 here. So it's not above 135 yet, so it needs to move. So we'll say buy vertical here. And here, right now, it's at 259 as our net debit. Now, if it were 250, we could do 2 contracts, but because it's more than that, we're just going to stick with the one. We're going to follow our rules. We're not going to overposition just because we think, oh, this one looks really good. Maybe I should overposition. None of you have ever talked yourself into something like that, have you? I hope not, but it can happen to a trader, right? But we're going to be judicious here. We're willing to spend $260 to make what? $240. Okay, so that's a pretty healthy percent gain here. Let's set it up here. We'll go first, trigger sequential. We'll create an opposite order. And then to you, what's comfortable of 260? Would you be comfortable at 50%, 60%, 80%, 70%, like I use sometimes? Many times it's arranged, and it might be different per trade, or it might be that you're a person, you say, I settle on this number. I settle on 65%, I settle on 80%, or whatever it happens to be. And maybe you like to do your orders all the same. You get to choose. That's why it's so important as you're learning these strategies and kind of what approach you might want to take to do it in your paper money account. So you can go out there so that you can test it, so you can know what to expect if you were to do it a certain way. Okay? It's fiddling around here just a little bit here. So That's okay. We don't mind being a little bit cheaper. But this would give us what? In this case, 263 would be our max theoretical gain. And let's again let's go with 75%. So if we get 75% of it, 25 is left, but we're going to multiply this by 2 point, I take that back, 0.75 for 75%. That means 75% of our 250s or 263 is $1.97. Let's add that $1.97 to current calculation and add 257 to it, our net debit right now. It says, all right, if we get up to 454, that would be about 75% of that. And if it ran up to it and executed for it, great. We'll be happy campers about that. Let's go ahead. We're going to make that good till canceled. Again, one contract only. And you don't have to try to capture it. You don't have to watch it. You can go and hit those targets like what we were looking at earlier on Lennar and on, I think it was just Lennar that hit the target immediately today after 1 week. Yeah, we love that kind of stuff. We like automation to help us out. And we'll go to our trading a smaller account bucket. Now, let's talk a little bit here. There's some questions here about a long vertical and a short vertical here. What is the scribbling at the bottom of the screen? Did I have some scribbling? If I had scribbling, I didn't mean for there to be scribbling. Oh, good. I just got filled on the PDD. A long call vertical, a short vertical and a long vertical, you can kind of try to create equal trades, okay, in terms of percent return. But some people like to, with a short vertical, some people like to be more conservative. I know people that like to be more aggressive. They say, I want to make more on a short call vertical and if I'm wrong, then I lose less. Okay, so there can be that approach. Many times in this class, we'll target for a higher probability trade, which is, 60%. In our long call verticals, many times it's structured to the point that you need the stock to move at least some. PDD, it doesn't have to move a lot for us. Abbott, it's going to have to move a lot for us in order to get up to that maximum theoretical gain. Okay, so great. Did we talk about the Adobe trade? We did not, because it's not in this class. So we did not cover Adobe Art, but I will be covering that when we get to that class. I'm not sure which one it's in, but we will cover it. All right, you guys, my time is up, but I appreciate you being here today. Now, I did not see a survey out here. If there is a survey, Brent will post it again. And we would always appreciate you filling out that survey for us. It makes a huge difference. We'd love to have your feedback. Okay. But don't worry about this. If you found this helpful today, go ahead and hit the like button. In the YouTube algorithm, it's really helpful if for other people to be able to say, hey, this one, yeah, that one helped me out. This is a class, a webcast that you might find useful too. Okay. Fellow Brent and I on our X accounts will post valuable information out there during the week. And I will be back here Monday for our last trading a smaller account trade where I am helping out. And then, as I said, Barbara's going to be back next week. So we're happy about that. So you guys, thank you so much. Appreciate your time and attention spending this time with me today. If you're working on these strategies, practicing your paper money account. That's the best way to really learn, as opposed to sitting on the couch and watching me and seeing what I do, right? You get to go through the steps yourself. You get comfortable with it. That's how you get comfortable with these strategies that can help you build a smaller account. All right, everyone. Coming up next is going to be, and I forgot to write it down. Let me see who it's going to be. James Boyd, he's going to be doing trading technical indicators. He, I think, should be up next. All right. We'll see you at the top of the hour. Thanks, everyone. Thank you, Brent. Bye-bye.